So markets are pushing higher today. I wanted to upload this quick little video that kept you guys up to date. So this is kind of like almost a mid to late day recap. NASDAQ market has been pushing the entire day. Obviously for the day, market looks incredibly overbought, but there is no confirmation of this thing selling off. It's still forming higher highs and higher lows. And this is following the inflation report today. So based off of today's inflation report, yes, it did come in lower than what was expected. Expectation was 2.4%, and we came in at 2.3% before seasonal adjustment. Core CPI came in at 2.8%, which again was the expectation. So not much of a change there. The big concern, again, we'll make a video about it later, but I wanted you guys to be aware that May and June of last year of 2024, there was no change. So this year, if there's any change, that will most likely mean that inflation will begin to go up. The thing that I really wanted to cover today was, first, Trump said that he was going to back off of Jerome Powell, because obviously he knows that he has no control over firing Jerome Powell, which is the threat that he originally made. This is the part that cracks me up, is as soon as things look to be getting better, he just loses it, right? He begins to point the finger. No inflation, and prices of gasoline, energy, groceries, and practically everything else are down. The Fed must lower the rate like Europe and China have done. What is wrong with too late Powell? Again, resorting back to name calling. Not fair to America, which is ready to blossom. Just let it all happen. It will be a beautiful thing. So the reason, one thing that I wish I would have had ready for you guys here is the Treasury bond. If you guys look at the 30-year Treasury bond or the 10-year Treasury bond, they are still rising. So the first thing that I want to remind you is that he likes to point the finger and be like, look, markets are rising, markets are recovering, things are looking great. First off, the only reason markets began to drop was because of the trade war that Trump started. There's nothing wrong with starting a trade war. We all knew that it was going to come with short-term pain, hopefully for long-term gain. But then he began to point the finger. No, this is not my doing. This is the previous administration. Then markets began to recover once he began to fold when it came down to his trade war, right? No longer making things worse between China and the US. There's still no trade deal signed, but if you really think about why markets are recovering, it's all based off of Trump's tweet of hope. Oh no, we're open to negotiation. We're no longer going to raise tariffs on China. That's all Trump's doing, right? Oh, you better buy stocks now. Things are going to get better. That's all Trump's doing. So the only reason markets are reacting in a positive way is based off of the series of tweets that you send. We all know fundamentally, based off of the most recent GDP report, overall, our economy is not growing, it's contracting. The stock market is not a representation of our economy and how it's actually doing right now. We all know that the stock market is a leading indicator of our economy, of how investors project our economy to do. So with him to now resort back to name calling, it brings me back to that same issue of, well, when things are not going his way, he'll begin to point the finger, make threats, and try to apply pressure in areas that he obviously has no control. By paying attention to the 10-year and the 30-year Treasury, you know, for those that do not know, what that means is the reason Trump is so eager and desperately asking Jerome Powell, or too late Jerome Powell, and the Federal Reserve to start cutting interest rates is because they need to refinance their debt, as in the US, and they do not want to refinance their debt at a higher interest rate. And they can only refinance their debt at a lower interest rate if the Federal Reserve begins to cut interest rates. But if we look at the most recent Fed rate monitor tool, we could see that there's about an 89% probability that the Federal Reserve is going to pause once again. And this is pissing Trump off because he's saying, look, everything's great. Like, why don't you cut interest rates? Jerome Powell has made it super clear. And if you haven't heard him speak, please, I encourage you to watch one of his FOMC meetings. He makes it very clear that he is waiting for economic data to support the case that things are slowing down before he starts cutting interest rates. And he has not seen that just yet. Unemployment is relatively fair. Inflation is relatively low. He doesn't see there to be a reason why he needs to cut right now. At least that is what he's made very, very clear. Until economic data supports a rate cut, he will move forward with it. Again, it's not that I agree or disagree. My opinion is irrelevant, just like Trump's, because again, the Federal Reserve is independent. It is not based off of or ran off of what the President of the United States wants to happen because he is desperate to refinance the US debt. And let me make this very clear. The US debt is not all because of Trump, right? The US debt is passed over from president to president to president. It's just unfortunate timing. It's falling under the Trump administration where a series of bonds are essentially like, it's going to come to a point where, do you guys remember where they were like, it's a ticking time bomb. The U.S. needs to refinance their debt. And then the Federal Reserve had to step in last time and aggressively start cutting interest rates to make it aggressively cheaper to borrow money, therefore allowing America to print all those stimmy checks and borrow at a very low rate, therefore artificially boosting our economy. The thing that I want to remind you is that the only reason, so to keeping that in mind, is I just wanted you to understand why he is so eager to start cutting interest rates right now. And that is simply because they need to refinance their debt. And although he believes, based off of gasoline prices and grocery store prices and the stock market's performance is enough of a reason to start cutting, it is not. You can trick the stock market with your tweets for a short period of time. You cannot trick the bond market. The bond market is dependent on actual sentiment of what is actually going on based off of economic data, not influenced by mindless tweets that say, buy stocks now, stocks are going higher. Again, we should all be aware of this. The stock market is very different than the bond market. That's why the bond market is considered a safer way to invest long term. Not as great as for ROI, but definitely a lot safer. So I just wanted you to understand, yes, markets are booming. Yes, markets are pushing. They do look overbought. But again, don't be fooled in the short term that although things do look like they're getting better in the stock market, don't forget to pay attention to economic reports and what they are saying. This shouldn't scare you to invest. You should always be investing long term, especially if you see value in whatever it is that you're investing in. You should just simply not just read headlines and invest blindly. That's the whole point of this video. I do apologize. It sounds like I'm losing my voice, but I just wanted to come on here and break down what exactly Trump was saying. So I hope that I earned your thumbs up. Please consider subscribing. And again, if you ever want to tune on into my live trading sessions, it's the second link in the description down below. Like always, let's make sure that we end the year on a great note. Take care, team.